it's May 2nd, 2023, right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live from Channels HQ in Lagos. Let's kick off now with the markets. We'll see oil prices down again on Tuesday, extending losses seen in the previous session. We see Brent crude there, that was down 0.3%, about 24 cents to $79.07 a barrel, while US WTI crude futures, that's down 25 cents to $75.41 a barrel. Both benchmarks fell by more than $1 in their last session. We'll drill down on what's driving that market later on in the show. To the global grains market, now we see Chicago wheat rose more than 1%. Corn CV1, that added 0.6% to $5 a bushel, and soybeans SV1, that gained 0.4% at $14.33 for half a bushel. We'll drill down on those prices later on also. And back here, for over 3 decades, since 1981, Nigeria has continued to join the rest of the world to observe the first day of the month of May as the International Workers' Day. The International Workers' Day, otherwise called May Day, is promoted by the International Labour Movement to commemorate workers whose vital services keep countries and their businesses alive. Our next report looks into the plight of Nigerian workers as they join their colleagues across the globe to mark the 2023 International Workers' Day. Take a listen.
May Day, also known as the International Workers' Day, is celebrated globally to appreciate workers who create the wealth for nations to thrive. Workers in various industries across the country also trooped out to commemorate the day, but not without a thought for the challenges they have to deal with in the workplace.
Workforce is the lifeline of the nation because it takes the workforce to build the structures, it takes the workforce to be in the hospital, it takes the workforce to be in the market. The Nigerian worker needs more than they currently get.
As of today, no Nigerian worker can effectively meet our family commitment and expenses. You cannot, to even go to work has become so difficult. The purchasing power of Nigerian worker has been depleted by galloping inflation. And the incessant increase in electricity tariff, incessant increase in transportation occasioned by fuel price hike, and everything has skyrocketed. So for average Nigerian workers, it's as if Nigerian workers are living corpse.
Remuneration is another major issue of concern for the Nigerian workers. The national minimum wage stands at 30,000 naira. At the time this became a legislation, there were excitements everywhere. However, this is not the case at the moment. It has become a far cry from their wishes.
If you gain 30,000, if it's in dollar, if it's in pound, you know that that's one of the strongest negotiations you can earn. But as you are earning it, and then inflation takes it over, and you devalue your naira, you know that it is now worth over $40. That's the problem.
What is being paid in some establishment will not even pay your transport to work in 30 days. But you have to eat, you have to clothe yourself, you have to live in a house. It is even worse because such wages are not even paid as are when due.
The employer-employee relationship in the public sector has never been an easy ride in Nigeria. It is one filled with lots of protests and demands for better welfare. Having to deal with basic needs like housing, health, and economic challenges has not been easy. However, the federal government believes strongly that it is doing its best to improve the plight of the Nigerian worker.
What I can tell you is that the Nigerian workers are patient. Their government also have been trying their best. The manufacturers, in spite of the harsh climate for industries, have also been trying their best, those in the private sector. I can also tell you that it's work in progress.
As Nigeria joins the rest of the world to mark this year's May Day, many Nigerian workers hope to see better working conditions and remunerations for their services.
B. Oluwole now right here in the studio. Great to have you, Dumebi. It's been a while.
Thank you.
Yeah, the same prices still dropping, you know, after the record highs we saw, talking about the oil market now. And it looks like that surprise output cut by OPEC is not doing much for the price at this point.
Yeah, I mean, it did have its initial market reaction, which was, what everybody had expected to see. We saw oil prices increase, and we already know why OPEC is doing this. They're just trying to keep prices at least, at $80 per barrel. And remember that most of the countries, in OPEC, apart from Saudi Arabia, and not just OPEC now, OPEC plus, apart from Saudi Arabia and Russia, most of these countries need oil prices higher than $50 per barrel to make a profit, to generate substantial revenue. Even though oil prices are not as high as $100 or $120 per barrel, it is still sufficient for countries to generate substantial revenue if they are selling enough to the oil market. But recently, what is currently driving prices is the expectation that the U.S. Fed might continue its rate hike. So the U.S. Fed is is going to meet soon, and the expectations are that they would increase interest rates by an additional 25 basis points to about 5% to 5.25%, to the 5% to 5.25% range. And the reason why this is so is that the two main inflation numbers that the U.S. Fed, looks at, that is the core inflation, and that's inflation less volatile commodities like energy and food. They look at that, and they also look at the wage index, right? So there's a labor cost index that the U.S. Fed also looks at, and that tracks the rate of increase in wages across the public and private sector. And what that tells you is how fast is income, increasing across the private sector and the public sector. Why this is important is because the more income that people have, the more they're able to consume, and the more that stokes inflation. And the reason why this is also important is because we know the issues that have been happening with the U.S. labor market. It's practically tight. So suppliers or employers are increasing wages just so that they can get more people to come in to work. So these two indexes or these two indicators for have actually increased. And so the U.S. Fed now it strengthens the U.S. Fed's decision to actually continue with its rate hike. Now, the flip side of this is that it could cause the U.S. economy to overheat. So already we know that an increase in interest rates, what it does is that it increases the cost of borrowing for manufacturers and businesses as well. And this means that credit is expensive. The possibility to expand, your businesses is also expensive, and as such, operating costs will increase, the money that these companies spend, and this eventually has an overall impact on economic growth and output. So essentially, it's more of like a hard-on decision for the U.S. Fed. So it's like go big or go home.
So it's still going to be that 25 basis points regardless.
Most likely.
Maybe the last one. Maybe the last rate hike for the year.
Well, I mean, it could be. And the reason why it could be is because when we look at the gap between inflation and interest rates, the gap has really narrowed between from where we're coming from. That's in the U.S. now, between last year and this year. At 5%, the gap between inflation and interest rates now is just about 0.5%. So it's really close. But the U.S. Fed wants to take inflation down to its target of 2%. And at 4.8%, inflation is still substantially higher than that. So already their position to increase interest rates is still, it's still strengthened.
Here ours was also, as close as there's talking about inflation rates
and interest rates. Well, if you look at headline inflation and the MPR, yes, it's getting close. But what the interest rates that's better used to anchor inflation expectations, anchor business expectations, and investor expectations are the interest rates on government securities. And why this is important is because in a stable economy or by economic theory, the expectation is that an increase in the anchor rate should trigger an increase in other interest rates in the economy. So increase in fixed income securities, increase in bond rates as well. So because this is happening, the monetary policy transmission mechanism in the US is really strong. So we're seeing these interest rates also take effect in like mortgage rates, bond rates, government securities. So we know that that's why it's almost easy to say, okay, the US fund rate, and it's easy. But when you really want to check how far inflation, how far a monetary policy is working to cool inflationary pressures, you look at the interest rates of other government securities to see how well this increase in MPR is anchoring, all of this. But in Nigeria, the transmission mechanism is really weak, and why I say so is because the bond rates, a 10-year FGN bond right now is at 10%. The 364-year T-bill rate is just about 14%. Then you have the 90-day, short-term interest. Short-term interest is still really low, still far below 22%.
Yeah.
So, and this means that the negative real rate of return on investment is high. It's widening, and unfortunately, because inflation actually increased. Inflation increased in March, that also testifies to the fact that there's still that disconnect between interest rates and inflation, or rather, a better way to rephrase it would be to say that if the increase in interest rates or monetary policy tightening is still playing catch up to the increase in inflation.
Still playing catch up, even though we've gone so high at this point. But now, this with oil prices going down, at this point, that's putting pressure on our earnings.
Yes.
That's talking about Nigeria, and we've still not met up with that quota. But there's been improvement.
Yeah. I mean, we've been seeing gradual increases in Nigeria's oil production, which is good, although it's not up to what the government is expecting for the year, which is about 1.69 million barrels per day, and still not up to the OPEC quota of about 1.7. So we're still far away from that, but there's still a bright spot. If all the challenges regarding like oil production, the government continues to put effort to curbing like oil theft, vandalism, and we're beginning to see, and we continue to see this uptick in oil production.
So Nigeria's quota, stays the same, regardless of the output cut we've seen from OPEC, the surprise which takes effect this month.
Yes, and that's because of the compliance rate. So OPEC is, like I said, OPEC is being very conservative, and they're also, it's more of like a scale of preference, right? So we know where to shuffle. So OPEC is looking at where they can shuffle and gain the most. So instead of increasing, so imagine if Nigeria's quota is 1.7. Nigeria has not been able to meet that quota since the beginning, since they gave us the 1.7 quota, and this is almost like, I think, for about 4 to 5 months now. We've had that 1.7, million barrels per day quota. Then you have Saudi Arabia that has consistently surpassed its quota. So what OPEC and its allies are doing is would rather give Saudi Arabia a lot more than tell Nigeria to increase its quota. So what they're doing is just not putting their eggs, in one basket, and ensuring that they're giving the right quota to the right people. Yeah.
Right, and we got some positive forecasts there. We see not just palm oil production, that's forecast to rise about 7%. What are they looking at to forecast that?
Well, I mean, we're seeing like good weather reports in the growing region for Nigeria's palm oil production. So palm oil, I mean, the one that we really use, you can get that, from the eastern part of the country. You also can get that in some states like Ondo. So essentially, because of, it's now like the rainy season, at least we're entering it a little bit, and we're seeing an increase in the it's so basically it's the season, rainy season. It's beneficial to like palm fruits and all of that, and then we're planning there'll be an increase in the production of palm oil. But aside from that, we've also seen like an increase in government intervention schemes towards the production of palm oil, and most likely that's beginning to also take effect because palm oil, like other agricultural commodities, the gestation period is really long, so it does take some time before you begin to see an improvement or begin to see the impact of investments in that particular sector and then reap the benefits. Then another thing to also consider is the increase in private investment into that sector. So we've seen the growth in companies like Okomu, Relief. So you see that these companies are investing not only even in the crude oil, palm oil stage, but even in the processed palm oil production. So Nigeria, as of today, is the fourth largest producer of palm oil. That's after Indonesia and Malaysia. But then, we're still net importers of the commodity. And even though the government and the CBN as well, they put palm oil on the forex restriction import list. So that's one of the reasons why we've seen the price, increase over the recent years, alongside other issues like insecurity affecting production and bad weather conditions. But regardless, with this policy forecast, we expect that prices will begin to decline, but it might not be so drastic. The decline might not be so drastic, and that's because of all the underlying domestic issues that affect palm oil production. So remember, I said that Nigeria we do have the capacity to produce, but we don't have the capacity to refine as much and then sell the products to the domestic economy and even export is really low.
So it's the same story with
with
the
a
major
lot of
commodities.
exactly. So smallholder farmers still contribute about 80% to Nigeria's palm oil production. Then you now even go further down the value chain of palm oil processing, and then where you have production of crude palm oil, because that's just the first stage. That's the beginning of it all. You still have refined palm oil, that's RBP. Then you also have refined palm kernel oil from it. Then you also have palm kernel. So there's a whole thing that goes on.
So many byproducts.
So many byproducts. So these are some of the gaps that Indonesia and Malaysia are currently filling in the global palm oil global oil market generally. So I don't know if you remember when palm oil prices actually really increased on in global market last year, and that's because Indonesia was saying they were going to ban.
Yeah, I remember.
They had an export ban,
Yes.
a temporary export ban, and that's just shot up the prices of palm oil. So we saw a shift in demand to other oils, other cooking oils like refined and bleached palm oil, palm kernel oil, sunflower oil, and all of that Malaysia as well, sells. So, this is an opportunity, I guess, for Nigeria to just keep the momentum going, encourage private sector investment into this sector. The current players are really doing well. So clearly it means that there's room for the market to expand.
And we need more players in there.
Exactly.
All right, let's look at the domestic commodities market now.
Yeah.
What's happening there?
Well, we're seeing the impact of seasonality come into play here. So now is the planting season for a lot of these commodities, and we're seeing prices. The expectation is that prices will increase. So commodities like tomatoes, pepper, onions as well, we could see their prices increase in the near term, and that's just because seasonality is taking its toll. There's also the fact that the exchange rate has been quite stable at parallel markets and even the official market, and it's because the CBN has been increasing its intervention efforts, even though we're seeing a decline, a massive drawdown on external reserve, but we're seeing the Naira stabilize somewhat, and this is aiding importation of some of these commodities that we use, so things like tomato paste and all that. So we could see their prices, decline a little bit. Things like wheat as well. So we could see the price of pasta, noodles, decline a little, right. Flour as well, and this is just because the exchange rate has actually been stable for quite some time now. We started seeing this stability since the election period, and even up until now, we're still seeing this same stability continue.
We need those prices to come down. So
to just come down, at least
to reduce disposable income.
Exactly.
All right, thank you so much, Dumebi Oluwole. Thank you. It's always great having your perspective.
Thank you so much.
All right, so now we have another conversation coming up. It's still about rising food prices. That's in a moment. To stay with us.
The Dangote Petroleum Refinery is going to be the...
Welcome back now to our next conversation. We'll see the average cost of preparing a pot of jollof rice for a Nigerian family of 5. That's risen by 9.73% over the past 7 months. And that's according to a new Jollof Index report by SBM Intelligence. Joining me now is Ikemesit Effiong, Head of Research, SBM Intelligence. Great to have you.
Absolute pleasure to be here.
Yeah, so it's quite sad, because all of us, most of us love jollof rice, and now we're seeing the cost of preparing for a family of 5. That's gone up a lot in the past 7 years. I saw the previous report, and definitely this is almost bringing that saying. It'd be like say we no get food for poor man food no day again. Is that what we're seeing here?
Well, pretty much so. So you're seeing a lot of families. It's something that we've observed over the last 3 years at least, right, where a lot of families are cutting down on the frequency of meals. We did a study almost 2 years ago, and the majority of our respondents say they just have one major meal a day. Right, yeah, so this is just a continuation, right, of that outflow. You're also seeing a lot of substitution in terms of protein sources, right, and so for many people, chicken is only something that they see during the holiday period. It's not a regular staple, right, of their diet anymore. Fish is becoming a much more popular proposition, but even within the fish subsegment, you're seeing people, right, play more with, some of the more cost-effective options, as it were. So whichever way, Nigerians are finding their way to get their jollof rice fix in, but just overall, in terms of how we weight the index and all of that, like you said, that amount is at a 7-year high now. It's crossed the 10,000 naira mark for the very first time with this.
Because I remember there was a time you could make a pot of jollof rice for about maybe 2,000 something.
Yes, indeed. In fact, when we started the index, I think it was a little under 4,000 now. So it was a real, projection just in one direction.
But looking at the data now, I want to know, I'm sure it's interesting how you guys pieced all of this data together. How did you go about it?
Oh, yeah, sure. So we have enumerators. First, we surveyed 13 markets in Nigeria. The index for the first time expanded to Ghana. So with this index right now, we pulled the markets in Accra and Kumasi, right? And what we basically do is that we track the various prices for the various ingredients and condiments that go into making a pot of jollof rice. And we also track chicken too, right? Because, that's a popular, so that accounts for, a large share of the price increase, right? Because, that chicken subsegment, right? Is quite volatile. So we track 30 markets across 9 cities right across the country. Right now, if you're in Abuja, it's a pretty horrid time, right, to make a pot of jollof. But if you're in Onitsha, it's more cost effective than the rest of the country. Even though with Onitsha, it would still cost you about 8,000 plus naira. So it's, it's a dime a dozen, sort of difference, right, in terms of the price indicators. So we do that every month, and then we compile the index, right, every quarter, and we release. We typically don't do it for the 4th quarter of the year because of the seasonality effects, right, that holiday shopping, right, sort of distorts the numbers. So for the first 3 quarters of the year, we compute the index, and as you've seen for Q1, not a very
quite big, quite huge there. So obviously we've had that debate about, Ghana jollof, Nigerian jollof. So I'm wondering, which is more expensive?
It depends on the month, right? So in January and in March, Nigerian jollof was slightly more expensive than Ghanaian jollof. Ghanaian jollof was more expensive, right, in February. What we've actually noticed, and we only really started collecting data from Ghana from like the middle of last year, so there may be some statistical collection bias to this, but we think that there's, we think customers are more aggressive in terms of their substitution behavior, right? Because as you know, right, Ghana has been dealing with, fiscal macroeconomic challenges of late, and that is really filtering through in terms of, where the inflation price point is. It's quite high there in Ghana. It's not of 50%. And so customers are really, really feeling with a real sense of immediacy, right, these price increases. And so our initial observation is that Ghanaian customers are being more circumspect, and they're also being aggressive in sort of what those substitute food items are in terms of making their jollof, right? Nothing to say about the quality, just about the price.
Yeah, so whichever still wins. Maybe Nigeria.
Well, for the time being, we'll see how it goes. I'm sure we'll have a follow-up chat on this.
All right, so yesterday we celebrated, May Day, and we still have that whole minimum wage issue, trying to, take it up. And looking at the cost, of making a pot of jollof rice for a family of 5, and we see that minimum wage, 30K. Quite a disparity there.
Yeah, quite a disparity. And the interesting thing to note about the minimum wage is that it's not just a flat, fixed, arbitrary price. So, inflation adjusted, the minimum wage right now is actually lower than when we adjusted it up to 30,000, right, on a purchasing parity basis. And so for many families, if you're just doing like a straight weighting cost, right, for a family of 5, a third of your income, if you're on minimum wage a month, will go towards preparing a pot of jollof, which is highly unsustainable. Of course, we also have data, and we've done a study which actually shows that 2/3 of average household spending in Nigeria, right, is channeled towards food, right. So this is already something that is a clear and present reality for a lot of Nigerian households, and I would not be surprised if you have stakeholders within the labor union segments that are calling for a push, right, in the minimum wage, because it's really not keeping pace with
2023, that's basically the year of strikes. We've seen strikes, globally, everyone trying to get their wages up because, of inflation. But what kind of economic policies can we look at to actually bring this cost, back down? Because we know when prices go up sometimes, it's really hard for it to come down.
Yeah, very much so. So about 6% of that 9.7% rise in the Jollof Index was accounted for in September and October, and that was really the height of the fuel scarcity. So policies around consumption and transportation, so the things that facilitate the entire food ecosystem, right, the agricultural ecosystem, to get produce from the farm to the market, those will help. So infrastructure, things around how we manage our transportation mix, those will be a really big one. I mean, we've heard from people in the market where we survey that say, that's a huge thing for them. And there's also something to be said about us revisiting our currency management regime. I'm sure you've discussed this extensively with a rolling cast of analysts on this program. But we also noticed, especially around the time of the cash shortage, right, that we also saw, right, a bump in prices. And so doing things around that, you've got a plethora of FMCGs that are now releasing figures off of the top of my head, UAC, MTN, Notoria, and all of these guys who have said that the cash shortage accounts for why they are seeing, that dwindling price points in terms of where their earnings profile is. And so doing things around those two things, well, I think those are sort of like two of the big low-hanging fruits. And then revisiting our export policy, right, in terms of, what we allow, market operators to be able to import. So that at least in the short term, there's that cushion effect on prices, right? I know that we're pursuing a self-sufficiency framework from a policy standpoint, but Nigerian households are paying in the short term, right, for that. And so doing something around that would also help, right, temper that so that, you and I can hang out and have,
Well, I guess at the end of the day, hopefully the incoming government would put on their list, the first thing, bring down the price of cooking a pot of jollof.
Precisely. I'm down for that agenda.
We need our jollof rice. Thank you so much. That was Chemist Effiong, Head of Research, SBM Intelligence. Great having your perspective.
Absolute pleasure. Thanks for having me.
Thank you. All right, so after the break, we'll look at tax rises by the federal government as revenue drive intensifies. That's our next conversation. So stay with us. And controversies trail the federal government's new set of taxes introduced on imported vehicles, alcoholic beverages, and single-use plastics. The government has also increased the list of items banned from being imported into the country. Well, joining me now is Mr. Taiwo Yedele, Fiscal Policy Partner and Africa Tax Leader at PwC, joining me via Zoom. Great to have you on the show.
Thank you, Ladi. It's a pleasure to be on your program.
So I know you've described this as President Muhammadu Buhari's parting tax gift, to the people. give us a breakdown of the new taxes.
Thank you very much. So the fiscal policy measures for 2023 was dated 20th of April, 2023, of course, and it was recently released and signed by the Minister for Finance, Budget and National Planning. And essentially, that fiscal policy measure is something that is released every year, so nothing really new. And the areas of focus include protection measures. This is where Nigerian government will seek to protect some of the things we do locally, and also to implement the ECOWAS treaty, of which Nigeria is a signatory and, of course, a very major state within the ECOWAS states. But then also has provisions for excise as well as green taxes. So essentially, in terms of the excise taxes, in 2022, the federal government had agreed a roadmap of excise increases for 2022, 23, and 2024 for increases on alcoholic beverages, non-alcoholic beverages, and tobacco, spirits, and wine. And I have to say that some of the increases were as high as 95%. So then government, in the middle of the implementation, has then decided that they wanted to top up the increases, which seems really very unusual and actually curious why you want to do that, given that, so this sector, for example, food, beverage, and tobacco is the largest subsector within manufacturing, accounting for about 40%. And over the past 7 years, the average growth rate has just been about 2%. In fact, in Q3 of last year, it was a negative growth for that sector. Of course, employing millions of people directly and indirectly. So why would you want to change your policy midway? Particularly because the naira scarcity has dented the growth of that sector, with significant decline for some of them, record decline in double digits that we haven't seen in decades. So when you find sectors struggling with issues like that, we've seen countries like the UAE, where of course you have to respect that they use a lot of data, where they initially suspended excise duties on tobacco, alcohol, wines, and they later just canceled it because based on their data, this is not helping the economy in terms of tourism and entertainment. South Africa did the same thing, I think, about 2 years ago, suspended excise. So if you can't even suspend in Nigeria, you've agreed increases. Why do you further increase increases at a point when the industry is struggling? And the other one is the green taxes, where government says for single-use plastic, you pay a tax, as well as for importation of vehicles. If the engine capacity is more than 2 liters, that's 2,000 cc. Now, while we do understand that Nigerian government has signed to commitment around CO2 and want to get to net zero by 2060, it's important that we put the national interest first. What is good first and foremost for Nigeria, and how best do you do it? Especially making sure that you consult widely with all the parties that will be affected. Use data for the decision so you can know the likely impact, not only on the industries that will be directly affected, but also the ripple effect on the entire value chain, from farmers to suppliers to workers to their households who depend on them, and so on and so forth. So essentially, we think that this is something that is not warranted, given that you have just about a month to the end of this administration, and also bearing in mind that the circular was released just a few days ago, and some of the provisions took effect from May 1st, and the remaining provisions are to take effect from 1st of June, which is also not even consistent with what you have in the national tax policy that says that we must give a minimum of 90 days between changing tax rules and when they do come into effect.
A time like this, where incomes are squeezed, we're seeing inflation, at record levels. When taxes rise, the businesses end up passing on that cost, to the customers. So I'm wondering, customers are squeezed at this point. How is this going to impact the economy going forward?
Yeah, great question, Ladi. So essentially, you don't want to. We've been struggling with inflation, and a lot of it has been more intervention from the monetary authorities. And people always say we don't see a lot from the fiscal authority. Unfortunately, these interventions by the fiscal authorities, these measures are actually inflationary. So when you raise excise, and you then introduce tax on single-use plastic, which, by the way, hasn't been properly defined as to where does it start, where does it stop, who will bear the cost? Is it the seller, or is it the buyer? And how do you even calculate the tax? If the bags are being given for free, or should it go to the manufacturer? Who is going to collect it? Customs usually collect excise, but what they even do when they're collecting excise is they come and sit in your factory. You must provide accommodation, so many things. Many of the guys manufacturing single-use plastic have no means of doing all of that. But having said that, to your question, these will further put upward pressure on inflation, definitely, when you increase prices. Because of the dwindling consuming, purchasing power, I should say, of consumers, the manufacturers will not be able to pass all the cost to them, which means they will bear part of the cost, and that will further squeeze their margins, which is already really squeezed. And then the rest of it, they will pass to the customers, and then that would increase inflation. And for customers who can't afford those formal sector products, they would just switch to the black market or the informal sector, which would then mean that government even loses the tax that they're trying to get, and they may not even achieve the objective they're trying to accomplish in terms of the green tax. It's actually a contradiction, if you ask me, that Nigeria on one hand is trying to promote, green economy, but then it's also a country where you subsidize fossil fuel by way particularly of petrol subsidy. It's the same government where almost everything is done by hard copy. You don't have e-government where you can save the trees by not printing all manners of documents for various things you have to do with regulators. So I think that there are low-hanging fruit that Nigeria has to try and prioritize. Every country that is considering issues to do with the environment have to put their national interest first. We saw that in the EU. With the issue with Russia, they actually went back to coal. So in fact, the data shows that the world is consuming more coal today than we did before oil took over from coal, because the world is growing. We need energy. So all of these issues have to be taken into consideration in policy making. And I think the one that even concerns me the most is the policy inconsistency aspect of this, where you've agreed a roadmap, you've published it, people have made their plans based on that, and then midway into your implementation, you then change your mind without sufficient consultation. Neither did you use data or evidence to justify what is it that is different now from when the previous roadmap was agreed to justify these new increases.
Maybe I guess the difference is the government actually needs more revenue than they expected at that time. All right, thank you so much.
I can tell you about that, Ladi. The revenue that is estimated from this is barely 60 billion naira. That's less than the amount that NAPIMS alone spent on public relations in 2021, which was 90 billion. So I can tell you, if they really want to get revenue, the revenue will come from enhancing compliance, rather than just trying to increase the burden on those that are trying to comply. These sectors pay 4 times the average tax burden of the average sector in Nigeria. So they can't bear more. It's just not affordable.
So I guess the best move is increase compliance. Thank you so much. Always great having your perspective. Mr. Taiwo Yedele, the Fiscal Policy Partner and Africa Tax Leader at PwC. Thank you so much.
Thank you, Ladi.
All right, so let's head on to the markets now. We're talking taxes there. And now, definitely, taxes do impact markets. And we have Inijo Mekwa, first trading day for the week. That's coming. That's today.
Yeah, Ladi, I couldn't help but, follow that conversation you had with Mr. Oyedele. And I know we talked about the finance bill,
yes,
which we were waiting for the president's assent, and now we have this. And the issue of policy somersault, we have the subsidy
Yeah.
We have the census, and now we just have at the dying minute when this administration is almost getting to its end, we now see these new taxes, and one begs...
And the changes are quite mind-boggling.
Yes, they are. And as you asked him, is it the issue of getting more revenue? How much can they get from these new taxes compared to if you actually boost the manufacturers, the real sector.
And increase compliance.
Exactly, which is what the IMF said some days ago after the spring meeting, that let's increase our tax net. Let's make the tax system more
because there was that debate about what IMF recommended. Some said increase taxes. Some said the IMF said increase taxes, but I guess not.
I think a lot of journalists just missed it. Yeah, a lot of journalists just missed it and thought that the IMF was recommending increase in taxes. Obviously, that's not what they were talking about.
Tax compliance.
Tax compliance and increasing the tax net, the number of people who actually get into that net, and that will help instead of, too much burden on
increasing taxes that are already high.
Who will employ them? Anyway, so let's go to the markets now and see that last week, we know yesterday there was no trading. Today, the market opens and the NGX opens with good news that in-person trading at the NGX would start fully from today. We hope to bring you that during Business Incorporated, so do join me then. But let's see what happened, how the week closed. 4 trading days last week closed in the positive, more than 2%, and we're back at 52,000. Equities is also, remember, we're dilly-dallying around 27 trillion, but we're back at 28 trillion there. So a good one for us there. The volume also up, value up. This is for the week last week because we did not trade last week. But just before Ladi will chase me out of here, let's speak to Peter Abbey now to give us an overview of the month that just ended. That's April. See how the market did, even though we see last week ended in the positive. Hi, Peter. Good morning.
Good morning, and thanks for having me.
Good to have you. So give us an overview. Was it a good, because it seems that I reported a lot of negative sentiment at the NGX last month, but just give us what happened eventually when we put all the numbers together for the month of April.
Okay, so you are correct. ASI lost, all-share index lost up to 3% last and in April, which reduced the year-to-date gain to 2.25%. But I mean, we could attribute this loss to so many reasons, especially the fact that many names were being marked down for dividend. Don't let's forget that, which will definitely reduce the whole share index. And also, some profit taking happened after the numbers were released in March, and some few reactions to them. Some people started taking profits after taking position in this name. So these are some of the reasons that we could attribute to the market loss in April. But don't forget, last week markets gained, which is a very positive one. Looking at the Q1 numbers have started rolling out, and banks are really good, except for a few of consumers and industrial. We feel the buying interest will continue into May, and as more dividend is also being received by investors, there will be reinvestment of this dividend. So it will be positive in May, hopefully. This will also be a good one for the quarter.
Yeah, but I can't help but talk about Transcorp. Transcorp gave us a lot of news and drama last month. I don't know if it's over yet with what the two big investors have done. What do you see happening to that stock, especially with the way it ended in the month of April, looking at the two, big investors that have exchanged shares?
Well, but it's not only access, if you ask me, that give us good values, Transcorp rather. We also had access. Over 1.2 billion shares were crossed in Access Corporation. So not only Transcorp that led activities last month, but of course was major. So we feel going to this is just to show us that we have values in some of these Nigerian names, and many investors are looking into them, like we saw in Transcorp, and also Access over 1 billion cross. So going forward, I think is a good one for Nigerian names to see interest in them, and also this will help to spur activities generally in the markets.
And now that in-person trading is back, do you see it maybe moving investors one way or the other? Do you see it making any difference?
We had it close to 3 years. And I mean, activities still continued. Transactions continue. So I feel this is a new norm, though it's good that it's open fiscally, but I think it will just help to breed interaction among brokers, more information. But I mean, the effects will largely be muted, in my opinion.
All right. Okay. Thank you so much. And you do say that you see the month of May being positive. We hope that your prediction comes correct. Thank you so much, Peter Abe, trader with Stanbic IBTC Stockbrokers. All right, laddie. So we hope to see a positive May.
Hope it's not selling May and go away, according to Anita.
Well, we'll follow every day or every trading day and see how it ends.
I'm wondering if the Transcore rally is over.
I wonder too.
I'm curious about that.
Is that an end to that story?
That rally. Quite an incredible rally, though.
It was very, very dramatic.
Dramatic rally.
Transaction.
All right, thank you so much.
All right, thank you.
All right, now let's take a look at what's happening in the UK. We know first quarter earnings rolling in, and see the oil giants there have started reporting. Let's talk to Juliana right there in the UK. Great to have you, Juliana. So we see BP made a $5 billion profit first quarter of 2023. That's another bumper profit.
Good morning, laddie. Bumper, yes, extraordinary is how Bernard Looney, the CEO of BP, described those profits just for 3 months of the year. And that's despite the fact that we know that a barrel of Brent crude, which is the benchmark for oil prices, has fallen. So this time last year, it was about $102 per barrel. At the moment, it's about $80 per barrel. And as to be expected, the trading results has caused an uproar because in this country, the fact that we're going through the highest cost of living crisis we have done so in 40 years is linked to the energy crisis and the fact that Putin's war has definitely leapt up those costs. Again, with the announcement, they've also said that they're going to be buying back shares of, I believe, about $4 billion. They're also going to be giving investors a handsome dividend. And Sir Keir Starmer, the Labour leader, he has been speaking on radio this morning, and he's saying, what, has this Conservative government led by Rishi Sunak done about the windfall tax that was announced begrudgingly over a year ago? And since then, yes, BP have invested quite significant amounts of funds in this country, but some say it's not enough, particularly as this profit result that they've announced for the first 3 months of the year, $4.9 billion. That's mainly come from marketing and trading. It's not come from the actual grind, which costs them money, which is getting the oil and gas out of the earth in the first place. So yes, as to be expected, there are calls to put a heavier levy on BP. But if you just look around at what we've had recently, Chevron, ExxonMobil, the American competitors, all reporting the same significant, extraordinary results. We are expecting Shell to report something similar to on Thursday. It's not just BP, it's everyone. But when, households are struggling whether or not they should eat or heat, and you've got these gas firms, reporting extraordinary profits, it does make the trading season political.
Yeah, and we also see the banks too. They're reporting, and we see HSBC there trebling the first quarter profits. Looks like the bank will be able to pay its first quarterly dividend since 2019.
That's absolutely right. Very happy investors in HSBC this morning, which is Europe's largest bank. I think they've got assets of about $3.9 trillion, 3.9 million customers, over 200,000 staff. They've reported profits this morning, as you said, trebled what they previously had in this quarter last year. It's come up to $12.9 billion. Now, they've spoken a lot about Silicon Valley Bank. Remember that dramatic weekend in March, laddie, where there's a huge scramble of what was to happen with the UK subsidiary. They ended up purchasing it for just £1. And according to their bosses, having looked at the SVB coffers, there are no nasty surprises. So they're expecting to bank about 200 million in profit from that purchase. And of course, they are going to have more profits from SVB in later months. I think as well, some of the impairment costs that they put aside last year for a sale that they were to do in France has been removed. That sale is not taking place. So pretty great for HSBC and, of course, any other UK bank. We've got interest rates at about 4.25%. 4%, which means the profitability of a bank is higher because it costs more to borrow. Most people go to banks to borrow money. So, yes, a really great earnings season, which has lifted the UK blue chips this morning, Laddie.
All right, I guess we'll keep tracking all those earnings as they come out. Thank you so much, Julian, and nice braids.
Thank you. Quite bright, but thanks, Laddie.
All right, now let's look at other markets now. We see Bitcoin there holding up 27,000, but we see there's a lot of sell pressure this time, profit taking. Some say maybe it's just healthy, at this point. It's had a good rally for the first quarter. Now let's look at the Fear Greed Index. That's also inching downward there, 55 points. Greed, we've been used to that 60-point level, but now we're getting to greed, and maybe, who knows, might see fear at some point. If not, extreme greed could be on the cards. Let's look at the top cryptocurrencies we track. Now we see Bitcoin that's down 1.70%. Did get to that 27,000 level. We see Ethereum 0.94%. BNB, that was on the other side yesterday, going the other way with positive close yesterday, 2.55% down. Profit taking on that. Cardano, 1.22%. And we see XRP still trying to stay close to that 50-cent level. Let's bring in Element Damble now, joining me via Zoom. Great to have you on the show.
Oh, hey, Lottie. Thanks for having me again.
Yeah, so we're seeing that psychological 30K level is getting farther away from it. Is this a healthy profit taking?
Yeah, no, I think the last time we spoke, it was around that 30K level. Now it's just trading around 28K, which historically is a level of support. And generally what you do see is just a lot of uncertainty in the market ahead of tomorrow's Fed meeting.
And what price levels are you watching at this time?
Yeah, again, similar to the last time we spoke, it does look like a potential fall to a level of 27K still does exist. But in the grand scheme of things, I think a lot of bulls will be optimistic that prices will not only move to 30K, but potentially break out of that 30K ceiling, heading towards 32K for the first time in over a year. So I think that would probably be a target for a lot of long-term bulls, but I still think there's a possibility for prices to fall back down to 27K. But again, with this week, we have the Fed meeting tomorrow, and we have non-farm payrolls later on this week. So I think after those two key fundamental events off the table is when we're going to start to see some real moves take place.
So at this point, definitely the bull market is still definitely on from your technicals.
Yeah. Absolutely, because if you're looking at the overall volume, the relative strength index at the moment is tracking at around 45 on a 14-day period. And if you're looking at in the last 2-3 months, we've seen it move to as high as 90. So if it begins to move, let's say even towards the 60s and 70s, that should be enough just to see Bitcoin back over 30K. Of course, there are some resistance and ceiling levels in the pipeline, but I do think there is some potential for it to move back towards 30K again after this week once some of these fundamentals are off the table.
All right. Thank you so much. Always great having your perspective. That was Element Damble. Thank you.
Cheers. Thank you.
All right, so let's look at the top gainers now. This morning, we'll see MakerDAO topping the counter up 3.33%. So we're still seeing a lean gainers counter, no double digits at this time. FXS, that's up 2.93%. And we see Chiliz there, the fan token platform, that's up 2.01%. Might be starting some kind of rally, but we have a stable coin. USDD there, up 0.84%, showing that some traders are looking to get into the stable coins. Look at the top losers. Render token, that's had a good run in the first quarter, down 10.53%, $2.12. So that's how the crypto market is looking today. It's still quite greedy at this point. Investors still having a lot of skin in that market. And that's how the market is looking today. Thank you so much for watching. Wrap on the program. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. And you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, and you can watch all our videos. Thank you for watching. I'm Laddie Williams. Bye for now.